The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, we found a little bit of green on the screen in the grain and oilseed trade on Monday's session with corn, beans, bean meal, bean oil, wheat trade for the most part, all kind of finding some decent strength here to kick off the week. It was a different story in the livestock arena, though. Let's talk about it. Joining us now for market analysis, John Heimberg with Total Farm Marketing is with us. John, thanks for being here as we take a recap of Monday's session. And you know what? Not a bad day, I guess, for money flow on Monday across that grain and oilseed trade. Maybe could have been better. We finished off some highs, but still, I'll take it as a win, John.
Yeah, very much so. I mean, obviously after Friday's close, not the best, but we still saw good turns on the weekly charts. And that was something I was kind of really watching. You know, we did actually post a higher turn in corn, a higher turn in soybeans. First time in corn in 11 weeks on the weekly side of it. Same soybeans, I want to say it's 12, 13 weeks. You know, we haven't had a whole lot of positive movement on the weekly level, really going back to the first of the year. So with that, with the money flow where it is in terms of the fund positioning on the short side, you know, time of the year with the calendar, we just got through that really hard push, unfortunately, through that March basis contract window. I think the market was set up for a little bit of a recovery, and we're seeing that here. You know, now got a little bit of export demand today. That was kind of nice to see from Taiwan for the corn side as well as the soybean meal side. So we'll see where we are. To me, it feels like maybe we're in a spot where this thing wants to maybe get a little bit sideways here. So I'm cautious, but a little bit optimistic, maybe moving some things around and start thinking about the longer term here in terms of where this market could be come 5-6 months down the road.
Well, you mentioned those sales to Taiwan on the corn side. Didn't have that on my bingo card here to kick off the week. And then soybean meal and cake to unknown. And particularly, I was going to ask about May corn and May bean meal. It looked like both of those markets tried to test the 20-day on Monday and then kind of rejected that. So to your point there about maybe these markets moving sideways, maybe some of those moves in those two markets in particular could be a good indication that maybe we're going to find some of this overhead resistance here, John.
Yeah, you know, going back to that corn sale to Taiwan, that's the first time we've had a published sale or announced sale like on that morning session like that since January of 2017. So not having Taiwan flash sale on the bingo card is very understandable. But again, maybe that's just a reflection of what's happened in the corn market on the export front with China buying so much Brazilian corn, taking those supplies out of the marketplace. We've had to reshuffle the deck chairs. And some of those non-traditional buyers who haven't bought from us in the past are stepping forward and now having to buy U.S. corn. You know, so that was encouraging, I think, on that side of it. You know, and you go look at where the charts were. Like I said, we got a decent move again last week. Didn't quite have the best day on Friday, but we held in there. Yeah, we went up to the 20-day moving average. We haven't traded over that since realistically all the way back to January. Failed there, but we went back and retested the 10-day underneath. We held that. So it was a nice consolidation day, really, at the top of last week's trade. So we need to see if we can get some push through. I was kind of targeting maybe that May corn contract, maybe get up into that low 440 window. You know, we got some retracement there off this last sell-off. That could be a spot this market wants to get to, but we'll have to see if we can get a little bit more positive news, a little more positive money flow. We do have the USDA report coming out on Friday, so maybe the funds want to continue this short cover going into that report. You know, they did shave quite a few contracts off, a big chunk at 45,000, even though we didn't really see the price move in that maybe we still continue to see some more of those shorts get covered and give us a little bit of price strength here. Don't think we're out of the woods, though. I'm not saying we're off and we're running. We just got still too much supply in this front end. Corn that needs to find a home. And I still think that's just a limiting factor overall in the corn market.
Well, I think in general as well. I talked with plenty of folks during Commodity Classic here last week in Houston, Texas. And, you know, I think everyone's kind of asking, you know, are we putting a bottom in these grain markets? A lot of farmers in the U.S., a lot of farmers in Brazil are still very undersold in terms of corn, especially. So, I mean, looking at some of this chart action and some of the moves we saw last week, John, can we start to maybe say that we're putting a little bit of a floor in some of these markets, or is it too early to tell, John?
Well, maybe in the corn market, at least here, we might have ourselves a bit of a short-term low with that bounce off of 408 in the May contract here. Again, still, like I said, not out of the woods, but a spot maybe prices work a little bit sideways here for a while. Just let the news kind of come together between USDA acres numbers at the end of the month, grain stocks at the end of the month. Okay, now we're starting thinking about spring weather. We got the insurance price kind of out the door here now too with the February move. So I'm kind of watching. I think this is an area that I was targeting around 410 on the May, and it did at least seem to kind of hold in that time frame. So I do think our upside's limited because of the supply. I think guys do need to still move bushels, and we get, we're 20 cents off that low today with that rally. From that 408 to 430, that's probably a spot we see some selling, and maybe on the reason why we failed at the top of this a little bit today. On the soybean side, a little bit different story there. I'm not quite sure I'm comfortable yet. I actually do have a further downside target. The market's kind of in limbo right now, at least in terms of where the charts are. Still watching what's going on with South America with those prices. We've seen some of the premiums start climbing a little bit. So maybe that's a sign that, hey, we're getting in that 50%, 60% harvested window. Some of those beans that needed to move are kind of already moved. When soybean prices in Brazil climb, that gives us a little bit of boost here in our prices, even though they're still significantly cheaper. I was looking at things out into the summer today because we're seeing those August premiums maybe starting to climb a little bit more too. And if we truly have a short crop, that's in Brazil, that's where that's going to come into play. But right now, again, beans are still not kind of out of the woods here. Don't forget we put our low in the soybean side last year in May. But maybe with the crop the way it is, the harvest and the pace that it's going, maybe that low came a little bit earlier with those lower yields and those faster harvested beans.
Yeah, and I know too, in this bean market in general, we've touched on this before. Soybeans typically historically don't like 11. They either like being in the 10s or in the 12s, and we're kind of in this 1140 to 1160 window on the board price. And it feels like we've kind of been here for a little while. So I'm with you in that camp of I'm still a little concerned here, just depending on what direction soybeans pick and want to go here. But I'm a little surprised we've held around this level for as long as we have, John.
Yeah, I agree with you totally. You got to look at those historical windows, and not a lot of time spent in the middle. That's why I was kind of talking. We're in a bit of a limbo spot. Ideally, I was still looking at that target down at the lower end of this range, just the way the market was moving. Maybe we are getting some correction here. We'll see. I said I did add a little bit of length into the September window today, but I'm thinking that's more of a weather play, a value play here, giving some time on a position just in case. But at the same time, we're still watching what's going on the demand side. Export inspections were still pretty doggone good for beans today, over 1 million metric tons. Corn continues to be strong in this pace, which we need. But we're not seeing those new sales, weekly exports. You saw the sales numbers on Friday or Thursday last week. They were dismal again. Again, we just can't let this market rally too much here because that just shuts off that pipeline in terms of anybody stepping into the U.S. market. So again, I'm still very cautious the bean market here. Need to see some bigger signals that this thing is turning around. But at least maybe, like I said, we get a little bit of money flow here. Maybe we get ourselves a little bit sideways, see where the USDA report comes out. If they make a demand adjustment, increase carryover, this thing rolls over probably fairly quickly. And then obviously we got the acre numbers and grain stocks at the end of the month.
On the wheat markets too, Friday we kind of sold off and took some profit, then came back here on Monday's trade. Kansas City wheat especially, I've been watching that market here, has been pretty impressive lately. John, what's your thoughts on the wheat complex as a whole?
Again, we're watching some of the weather going on in the Southern Plains here with that market. The U.S. market still continues to struggle against the global prices, and that was kind of an impressive day in the wheat market. Just you get news that European crops bigger, Russian prices trading at multi-year lows in terms of the export market, and wheat found a way to rally off a negative start to the day. So that's encouraging in that regard. Again, that might be just a little bit of a short covering window in here. Kind of put a little bit of a triple bottom on some of those charts, which makes me a little nervous. Typically they don't hold. We'll see if things kind of break down, especially going forward. But at least the wheat story, for a while here now. It just feels like the last couple of weeks it's wanted to make a turn. It's tried to go higher, it's failed. It's tried to fall apart, it's held. So I think it's just looking for some news to give it some general direction. Maybe some of the weather coming into play if things stay warmer, drier as we get further along in that KC wheat crop that comes into it. But I think right now it's still just going to be kind of driven by the global demand and the price of wheat on the global scale. And unfortunately, U.S. wheat is still just not competitive when we start talking about what's coming out of the Mediterranean or the Black Sea region.
We are joined today by John Heimberg from Total Farm Marketing here on Market Talk. John, let's go over to livestock, kind of the opposite day in cattle and hogs on Monday with some pressure. Feeders kind of led the way lower, but we had a really solid end of the week last week. So I guess maybe a little profit taking, possibly. I mean, a little bit of caution, I think, in cattle futures, just traders waiting to see how things develop this week. That was kind of the sense that I got on Monday. Is that kind of what you felt like the market was doing?
Yeah, unfortunately, when the cattle market consolidates, it's a $2.50 move in feeders and, triple-digit move in lies. But it really is what it was. It was consolidation at the top of Friday. We got the 10-day moving average moving underneath some of these contracts on the front end. We went back, we tested that. April slid a little bit below it today. Cash trade 183, so that allowed April maybe to take a little bit of value off the table there with the futures where it is. A couple interesting things though that I'm watching in the cattle market. Retail values 303 plus on choice carcasses. Again, firmer at midday today. Watching the kill, 100,000 head is always slaughtered last week in terms of cattle. That's a pretty slim number. It's almost 20,000 under the year or the week before. So basically, we took a day off in the slaughter side of things in terms of cattle head coming through. So it makes you wonder, maybe that's what the market's reacting to, that low slaughter number, just the anticipation. We're going to get heavier weights. We're going to get more productions. Packers slow the chain down. Cash prices didn't exactly respond to that $300 carcass level like we hoped they would. So we'll see. I think cattle market's going to be very, very choppy. We're still not in the window where we need things to go in terms of that demand. But, I keep looking at these weather forecasts. My grill was rolling yesterday with some beef on it. Again, it's 60 plus degrees here in Wisconsin for the 4th of March, which is just unheard of on a typical scale. I think those things are all going to help bring some demand into this retail market. I still like the cattle market going forward, but if I'm a producer, I don't want to be foolish and not protect myself on the downside here. Given the amount of run we've had since December, those April puts are pretty doggone cheap to put a nice little floor underneath this market and leave that top side open for your cattle.
I know I agree with you on the retail side. My grill rolling as well here over the weekend, so I definitely think that's going to be an aspect here. I know, though, too, pretty devastating pictures coming out of the southwestern plains, feedlot country, Texas, Oklahoma in particular, parts of Nebraska seeing wildfires, and I know we're still kind of catching up on some of the losses. Do you think that could be something that impacts this cattle market here throughout the month of March, potentially, as we assess all of the damage, John? What do you think?
It's something that's going to be hard to grasp. We've talked about it with our advisor groups and our meetings too. Just, when you think about cattle country from North Dakota to Texas, again, not taking away from the tragedy of the incident, how many acres is that? What's it really affect? Does that bring cattle to the market faster into the feeder side of it, or does it limit numbers? There's no real good picture right now. So I think that's some of the indecision that the cattle market's having. Again, that might be a little bit of a longer term type situation in terms of how we figure it out. What is the death loss in terms of some of these feeders? How are things, what's happening in the cow crop? Obviously, again, like I said, the human side of it, the nature side of it, the tragedy that's still there, not discounting that whatsoever from the market standpoint. I'm not sure if it really knows what to do with it yet at this point. It's not like when we had the plant fire and, that one year and we lost, 20,000 head of slaughter production that day. So it's going to go through and be a little bit tough to figure out, or even like when we have the winter storms that come through with some impact. It takes a little time for the market to kind of digest where the numbers are. And I think that's still where we are with this one. I truly think the weakness in the feeder market was softness off of the good close on Friday. You got that strength in the corn market. Again, you're looking at a feeder market that's run aggressively since mid-December. It's got a chance to take some profit off here in a nice little correction. And so far, I think we're still just kind of in that mode.
Hog market, John. I know front month's a little lower, but deferred's a little higher to mixed on Monday. You look at summer month hogs, June, July, August, still hanging above $100 on the board. Your thoughts on this hog market that just continues to be fairly strong here in this window, John?
Yes, it does. On the front end, it's probably a little reflective of where we are in the cash index according to the April contract. So I've been kind of talking, that one's made me a little nervous for a while, but we continue to see that index travel higher. The deferred months, we got good value there, 102, 103. I know I mentioned it last week, and then probably I'm going to say it again this week. Make sure we're still building those put strategies there. But you got a chart that at least this time frame still looks very friendly to us in terms of the technical side of it. Kind of watching what's going on in the export market, what's going on with the Chinese pork prices, what's happening in terms of that production. You hear a lot of mixed headlines out of China regarding sows and what they want to do with their hog herd and things of that nature. And I think that's maybe breeding that little bit of optimism into those summer months. So again, to me, it's a market that's getting a little long in the tooth, even though it's great value. Make sure we find a way to got some value protected here. And again, hope we're wrong. Puts are there for a reason. They minimize the downside. They lock in a floor. And if you're wrong, that means your cash prices are going to be steady to higher. To me, that's just a nice insurance policy when you got a market that's as moved as aggressively as it has. You're looking at a June contract that was trading sub 88, back in January. Now we're at 102. That's a heck of a run in a hog market. Time to make sure you got some floor in place.
John, great thoughts as always. Final things from you before we let you go. Anything you want to mention or reiterate to folks today?
It's an interesting time because of where we are in the calendar when it comes to those grain markets here. We got numbers in front of us. We already got spring planting ideas starting to brew. Heck, we got a few people even sticking some beans in the ground in some places, with the warm weather. We'll see how those turn out, but stay cautious, take advantage of value when it's there. We still got a large supply picture. We still got demand concerns on the soybean side. Those are still things that are going to be limiting. I don't expect anything in terms of a strong rally here until we get some type of news. And I just don't think we're in that window yet at this time frame for a market that really want to kick in. So if I'm a producer, I sell when I see some runs, I move some value, move some bushels, or get control of those bushels that don't have a price attached to them somehow. Again, put strategies are still the best way to do it with the volatility, especially in the corn market. Those options are very cheap at this time frame to at least give you some peace of mind on the floor and hope that things do work themselves even higher.
John, if folks want to reach out to you, get some advice, I know a few ways to get in touch. How can they get a hold of you?
Sure, love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And again, don't forget that website of ours, totalfarmmarketing.com.
John, always good to talk with you. Thanks for joining us here today on the show. We'll talk to you again next week.
Sounds good. Have a great day.
John Heimberg there with Total Farm Marketing joining us here on Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.